Okay, in this video, I want to go over a database application that I created that will help people understand how to issues related to extracting information from XBRL-based reports. So what I did is I created a Microsoft Access database. So actually, I've been using this for, 10 years to do the fundamental accounting concept validation stuff. And what I did is I stripped out a bunch of things that you have to use XBRL Cloud or other stuff that you don't use. And I made it basically do basic queries of financial reports. Okay? So what I did is I wanted to use the complete set of public company filings by U.S. companies under U.S. GAAP to the SEC. But I filtered things down, and the database contains about 100,000 reports from about 3,600 entities and about 100 million facts, and it covers 17 different reporting styles. And all of these reporting styles contribute to the right styles to make this process work. So what I excluded, I removed all 2009 filings. Basically, I gave every public company one mulligan. If you're a golfer, you don't understand what a mulligan is, because there were too many errors in the 2009 reports. I also removed any report where the document period end date was in error, which means I could not get the facts correctly. I removed all reports where the economic entity identifier was in error. Basically a dimension error, and you can't find the proper facts, the basic facts. And I deleted all the reports from all entities that were not in the 17 reporting styles that I included. These are the top 17 reporting styles. So I'm cherry picking the reports, and I admit that. This is interesting. So when I queried that, that's supposed to be 109,000, not 190,000. I'll have to fix that. 109,000 reports. It took 24 hours to go from my computer to the SEC website, grab the report, download it to my computer, cache the report locally, and then repeat that process for all 109,778 reports. Took 24 hours. Okay, but then I cached the reports locally. So then I did additional queries, and when I query every report to get a fact from each report, it takes only about 3 hours, because you don't have to download the reports. It's already here. You don't have to transfer it over the internet. And what's even more interesting is that I didn't get it down. I was using a database to do this, the 28 millisecond database, which I don't know if they're around anymore. But I did the same queries in 22 seconds. So there's a stark difference between reading the files and basically putting the facts in a database and then querying the database. So this is what I got. And all I'm doing is I'm running a simple little query, and I'm asking for the value for the fact that represents assets for the current balance sheet date of the root economic entity. Doing the same thing for liabilities and equity. And I'm comparing the two numbers, and I'm getting a difference. And I did this for 109,778 reports. And I have a total difference of $20, literally $20. So the $20, it's a sum of a bunch of pretty much rounding errors. So if I, just to be clear, I'm querying every report. Every one of these reports has assets and it has liabilities and equity. If it doesn't, I excluded it. So this, if I expand that, you see here that, there's a $2,000 sum of differences there. It could be two $1,000 rounding errors, or this could be one $1,000 rounding error and three $1 errors. But these are basically the rounding errors. Notice that here for 2020 there's 0 rounding errors, which is either that or the rounding errors added up to 0. I have to actually look at that. That's only 4,000 reports, so that's not complete. Yeah, so anyway, these are the errors. And so here you're seeing some funky stuff. This is what I expected. The fiscal year 2010, 11, 12, all the way up to 2020. This I can kind of understand. I'm getting some reports for maybe the next fiscal period. But that makes no sense. There's no report that's filed for 1905, and these don't make sense either. This is probably a transposition error. And these, someone pointed out that these are basically caused probably by copy and paste errors from Excel, because these are basically Excel dates. So these are obvious mistakes. So they're easy to detect and correct. I don't understand why people would even let these mistakes occur. So I want to dig deeper. I take the group query and I break it down. Well, first, actually, I summarize this, make it a little more readable. But these are all the mistakes. You can see that it adds up to my totals from the other slide. Okay. And here are the mistakes. So Wakiva is making a lot of them. Donnelly, or DFIN, just got one. And S2 Filings has got a couple. And these are pretty basic mistakes. These are really easy to detect and correct. And the thing to ask is, if these guys have these basic errors, what other type of errors might they have? So the reason I'm doing this, so every one of these reporting styles has the concept assets reported and the concept liabilities and equity reported. So I'm excluding reporting styles that report, for example, net assets. So basically, all these are valid reports where you would expect to have assets and liabilities and equity, and you would expect that they equal. And they do in most cases. It's just those ones that I showed you are where the mistakes are. If I have this little application, this is a screenshot, and I'll show you the real application. This is the real application. Let me close this. So it's just basically, it's a Microsoft Access database application. It will give you a link where you go to download this application. But all the database tables are available. There's a lot of queries. You can write your own. There's the companies. So you can go into the list of filings, copy from that list, go into this Excel spreadsheet, paste, go to the comparison, and rerun the comparison. And there's 37 reports. It'll take a few minutes to run. You can basically do this for about 80% of the 3,600 reports. So what's interesting about this is that the fundamentals of this information is correct. You can find a balance sheet. You can find assets and liabilities and equity, and they agree. And you can then write queries that go to the next level, which breaks down assets, current, non-current, or if they don't have a classified balance sheet, it just has a list of assets, et cetera. And so basically, this is a great test set of reports, and it'll help you see the errors that are made and how to make it so that there are no errors in these reports. Anyway, I'm going to call that good.